People checking in with you. Yes, in his Georgian hat. Yeah. So quick little look at this. This is, I think, the most seminally important chart to be observing. I've said it a couple of times. I'm going to keep reminding you far more than the free views, but I can tell you this much. For me, this is a very important chart. And it's my main reason why I'm not calamitous about Bitcoin and why I'm kind of not going short. So some of you might be thinking, hey, there's a short setup. Why aren't you nailing it? You're a trader. You made money on the short side before. Why aren't you in? Why aren't you encouraging us to be in? Where's the balls to the wall? We trade all directions, etc., etc., etc. And here's the reason why I am pensive and of defensive but not aggressive behavior towards the off that Bitcoin has had. This is Bitcoin divided by the NASDAQ. This is two high beta, low interest rate environments, money proliferation markets. In other words, they both do well when there are not high interest rates. In other words, there isn't a huge payment being made on saved fiat. They do well essentially in negative rate environments, negative real rate environments, which we are in now. But they also will do very well in low interest rate in environments. They are digital assets. In the case of Bitcoin, it's not really a digital currency, Bitcoin. Stablecoin is a digital currency. It's almost the forerunner of the central bank digital token. Bitcoin is a digital asset. So it appreciates as fiat is proliferated. So does dividend or future growth stocks that may later dividend, that are highly speculative in beta, but may own a large amount of technical assets that will later lead to a company like Apple that is dividending like hell. Just a small reminder, Apple is through 3 trillion, guys. It's bigger than the entire crypto market's cap. One stock is bigger than the entire market cap. So if you're thinking, why does he keep comparing crypto to tech stocks? You know, crypto is going to be bigger than tech stocks. I just want to assure you that tech stocks and high beta stocks in proliferation, low interest rate times, it's a much bigger market than crypto. Much bigger market. And the NASDAQ trading, the NASDAQ boom and bust, that's an entire cycle further back when there was fluff and then they all disappeared and then there were the real winners were left standing. So it's actually paying credit to crypto to do it, not the other way around. All B, crypto B, digital assets B, a huge field. Blockchain, a huge field going forward. We do have to absolutely, the metaverse, huge field going forward. We'll be playing with our Game Boys and answering directly to government, and all our children will be owned and birthed by AI robots. Let's not get blackpilled. Anyway, so why are we not panicking about? So I'm going to make a couple of statements. This down move in Bitcoin is not going to be extreme. I think we could be quite close to actually the lows and bottoming out. Why do you say that? Hence why I'm not so keen to rely on the performance of inverted structures. They may perform, they may not. I don't want to miss the turn to the upside because that is the position of the macro move. You're following me. The macro move is the monthly chart where it's one candle is one entire month's of price data is an expansion. And I still suspect the rising wedge structure and the sell-off legs will get smaller as more and more people realize this and buy the dips. We had the half-time oranges, which was an absolute leverage washout of great scale. That smashed you from here down to there. Let's get Epic Pen up. My machine was restarted overnight. So that was the 64 down to the 29K. That was an epic washout. A lot of people were properly hurt by that, and that's not baseball. into that zone. This is obviously not in the same numbers, but you know that was actually before the 64. The 64 came here, but already Bitcoin was underperforming the tech market. So that's why this high is lower than that. That was your early warning signal, a divergence against a similar asset with a slightly lower beta than you. Let me say that again. Let me say it again. Listen, dividing Bitcoin by NASDAQ actually saw us get a divergence on the highs, the marginally higher high that ended up with the 64. Remember, Bitcoin first a high there and then later. Let me just flash it because some of you can't visualize charts. You see, that's the final high over there. That is the first high against tech. That gave you a warning. This was a marginally higher high over that. You were already drawing the rising wedges in here. On the NASDAQ, that's your final high there. And this was a lower high. Got it? Just as a reminder, in case, as I say, you don't visualize the chart as clearly. So, there it was. That's called an asset divergence, where there was more safety in the lower beta asset class, which was a contraction of speculative hype. We were reversing. The tide had turned. We were getting out of the most speculative asset into the slightly less one. So we're coming back down the ladder. Think of it as Inception, the movie, where they drop the time zones and everything moves a lot faster. Time frame wise, it's just crazy. You can't spend too much time each time you drop. When you are putting on and going deeper into the beta, you're going, each time you're dropping from one world into the next level, and you have to come back out. And there's a lot of ladders and doors to be transitioned out of before you get back into safety and a normal time, passage of time process. And with the higher beta you're going, you're dropping down. So for me, this is, the very lowest inception level and the one above it, where stable coin is your and dollar world is your normal existence, where time moves at the same rate. So over here, you remember the car crash over the bridge. The whole event and the whole movie largely was taking place as that vehicle was barely moving, because you were dropping down and the seconds were years, if that makes any sense to you in that analogy. So we are coming out of the higher beta here and backing off down the beta chain, going back up to the safety of the real world, because this is getting too intense. And then you got the sell-off. Then the people came back in after a long, hard, tedious base there. Note how quickly you started broadening though. Things show up earlier here. People weren't prepared to be as bullish as they were the time before. Memory, crowd psychology, memory. Even this final blow off here, the crypto market, Bitcoin, was absolutely killing it versus the tech market. You went from 2.2, the number there, to the left shoulder, 4.3 NASDAQ baskets of stocks with one Bitcoin. I mean, that's nearly a doubling. And it's quick. It happened here, February, boom. You weren't even this was in 2 weeks of February. There it is. March started there. 2 weeks. A doubling against the NASDAQ, Apple, Facebook. And when you came here for the reflation after the absolute heartbreak lows and the pain, you had that as your move. And then from here, you into a broadening structure, already showing, this is a megaphone. This ain't the runaway market. There's far more circumspect, lots of releasing out of hype and fluff, bloodletting. Now again, over here, let's see that. I'm just going to check my facts before I make a statement, because I want to be 100% sure I'm accurate. you see that? It's true, what I was going to say. Secondary high here, let's choose another color. I want to keep these lines on, so let's go with the pink. Secondary high here, that gave you your 69. Previous high. That is actually a marginally higher high, much as that was a marginally higher high to that. Did you get divergence on your BTC NASDAQ? Did you get it? Yes. This was lower than that. Let's go back to the chart and confirm what I've just said and why I was saying it. You see it? The second high, lower. The second high is lower. Staying with the pink. There. Again, divergence across the risk assets as you were coming to the left shoulder and the right shoulder. Very symmetrical. This was absolutely gorgeous head and shoulders, guys. I don't think you can get practically in the real world a more clean-cut, symmetrical head and shoulders. Let me just say that. If you are measuring these things, yes, you have your complexity there. That was your relative higher highs. That's all good. But this is a gorgeous head and shoulders. You know, it's masturbatory measures here for the proper technician. If you truly love the art, excuse the language. This left shoulder, bang. This right shoulder, bang. The right percentage, about 60% more for the final high. All coming through to a key level. All of that was the target level. I mean, I still look at this and I just go, wow. And there's nobody else in cryptoverse that is doing what we are doing. So we threw it out to a few free reviews. I haven't seen anybody who's even been, in my opinion, at the risk of sounding, and I don't ever want to sound arrogant, but a bit self-opinionated. I don't see anyone who's even seen enough into this to even copy it and steal it from us. People aren't talking about it. And to me, I think this is such a gift. But, you know, good stuff for us if nobody sees it. And I'm going to keep reminding you of it. This is absolute. I mean, the billionaire class, the elongated muskiness that are driving this thing are engaged in two arenas. Tesla, macro tech stocks, and shilling doggy in the cryptoverse. That's where they are. The billionaire class and Jack Dorsey of Twitter, Bitcoin and tech stock, social media stock. Schmuckerberg, metaverse, social media, trying to reframe as metaverse and wanted to do the crypto token Libra. The two arenas are technology, social media technology, and crypto's role in the metaverse. And they are coming to camp here. These are the two assets that should be compared to each other. No one else sees it. They all talk metaverse. They all talk Facebook. They all talk it. They don't divide the one by the other. They don't take it onto the charts and do it. I don't understand it. And I tell them, and anyone who will listen, and they don't want it. It's like, and on that point, I've spoken a lot of crap, got a lot wrong. But to me, that's throwing gold. It's throwing pearls before swine. It truly is. And they're sniffing it. They don't know what to do with it. But, you know, this chart here is much cleaner than the dollar. People don't realize the dollar has a tail of its own and is fucking up the symmetry of all these charts. We even see things on BTC Euro that we can't see on the dollar, including a head and shoulders here, which was here against the tech stocks. That's your head and shoulder. Now, you would never draw me a head and shoulder like that and I'll say, you didn't watch my content, did you? That ain't no head and shoulder. But on the BTC Euro, where all of these things have been bid up over here, you actually have the head and shoulder that traded. Just like that. That is that there. but not against the dollar. The dollar is becoming part of the story and is distorting and screwing up the symmetry and the cleanness of this asset class, the biggest player in this asset class. But everyone keeps looking at BTC USD. And no matter how many times you'll say, guys, the Dixie was part of the story for the first cup gold nugget. You had the goddamn chart where he blows, where he blows, where he blows. Snag it, snag it, snag it. You had the sell-off. So let's just wipe this. You had the blow-off into the 103. And at the same point, this was a dollar fear, God market, fiat event. The big money has to chase liquidity. It wasn't chasing into crypto. It was risking off. It was chasing into bloody bonds and debt. Yes, it's a shit asset. Yes, it will never get paid. Yes, it is paying negative real interest rates to a much higher inflation that's being declared. It doesn't goddamn matter. In their mind, they can sell it and get back out, and they won't have taken much of a loss in an environment of absolute fear where they're about to stop the entire economy from goddamn working. So it makes sense why big money, big institutions that are the movers of markets dumped risk assets, aka Bitcoin, and the guys don't realize this. You're still going to be compared and benchmarked. They dumped the real assets. You were at 10K. You woke up, you dropped 60% and actually traded below 4K on some exchanges. By the way, the COT indicator perfectly gave you the caution at the top there. Separate other story. Let's not bring that one in there. But that was it. At the very point that you went from on here, a final dip and then a dash to safety, the 95 to 103 on the Dixie. And people go, but in percentage terms, that's not a lot. It's a goddamn multi-trillion market, not hundreds of trillion, quads. People chase liquidity and safety when they are in fear, and they get out the relatively illiquid that will have high beta markets like Bitcoin. And that's a trillion cap market cap still. We were still around a trillion market cap, all tokens, maybe even 1.5. Now we're at about 2.5, I think. So this must have been at least 1 trillion. People don't realize that's chicken feed. Boom. Dollar goes up. From here, nothing but down for the dollar, down to the eventual low at 89.5. That was the wind in the sails. The whole narrative, but people say, well, they printed 7.5 trillion. Listen, you either do technical analysis or you do fundamental analysis. You're looking at a coin. You can look at its edge, you can look at heads, or you can look at tails. Call technical analysis the tails. This is the effect of 7 trillion being added in. Don't say, and there was that. That is that. That's what the market decided to do with the dollar, given that it was doing that. So you are looking at the fundamental event of them doing UBI, paying money, shutdown money, and all the other slush funds, special, transgender rights, quangos that they funded and everything else. That is what it did to the currency. And don't forget, that's the net effect of what other currencies were also doing, but that the dollar did more. So the net effect of the dollar index, which is essentially the Euro USD plus Swiss franc, a bit of pound, a bit of yen, the net effect of what other nations did versus the disproportionately larger proliferation that the Americans did, providing dollars for the world, Chiffin's dilemma, why we fail on a rising dollar. FX fails. The financial system fails on a rising dollar, which is Brent Johnson's hypothesis. And during this period, that's your snapback rally to 4. You stood we were soft here. We were relatively soft. I remember commenting here because the dollar was still coming off. Then we broke after our little return move. When did our little return move? Head and shoulder, micro head and, it wasn't mini head and shoulder, maybe not a micro there. After we'd broken our first cup gold nugget and we came back. Guess what was happening? The dollar just did a little bit of a revisit. September. There's September. Pullback. Running into September. The dollar up. Then we went quiet again. Then we really moded best here. You could still get in and around 10, 11, which is not 4, but it was 10 and 11, and we'd spent a fair amount of time kicking around 9, 7, 8, 10 over here. And we rode superbly here this period. And then there was a spell when in April, coming up to April, the dollar had a rally. That started to squeeze us on the rising wedge highs, marginally higher highs. Because now you had the momentum trade, all the momentum traders were now chasing into Bitcoin. So they were buying the goddamn dips even when the dollar was firming. Only for them to get washed out. When did the washout start? After April. Into the low here. When did you really get strength start to come in? June. And that was leaning on this attempted recovery. You were skidding into lows on a strong dollar. On a strong dollar. Then it started to slow. And then you got to walk out. But now you're walking out on an increasing dollar, but you're not nearly as zippy. Why? This is actually a half decent performance from Bitcoin. Because actually, if you take the lows here, just going into June, the beginning of June, Bitcoin was sub 37K. Since then, the dollar index has gone from 90 to 96. This is still a bull market. Why? We tell you that it's a bull market, but you are in a consolidation because previously you had this massive tailwind and now you've got a headwind. So this is a decent performance. Being at 46 right now versus 37 on a dollar index that's done 90 to 96. And people will say, but in percentage terms, that's not such a big deal, 90 to 96. Again, the massive cog on your bicycle turns a little bit for the little cog on the rear wheel in the highest gear to turn a lot. So small moves on the big cog rotates the rear wheel a lot. I've got my e-bike, I've got flipping 27 gears, whatever it is, and there's a tiny one with a couple of teeth, and you've got the big cog at the front with 36 teeth or whatever it is, 44 teeth. And so that one turns, this one rotates a lot. So it's called a higher beta relationship. It's leverage. One is leverage to the other. So actually, this is a decent spell. It's actually a decent spell from there to there. And you will have periods, as you kind of had here. Bitcoin went into a marginally higher high on a spell from the end of February, round about my birthday in March, end of Feb, to my birthday in March, which is the back end of March. You were there. You did go higher on Bitcoin, but it had become a grind. The momentum traders were chasing in, and they don't watch dollar or the dollar index at all. They were chasing in because they were sick of not being in and hearing new highs and 64,000 and buying the dip and everything. But eventually, they all went a little bit down April during March, and Bitcoin didn't get that much release. It had a weak bounce. That was your right shoulder during this period. And then it continued to spill. And there was a spell where that's going down at the same time this eventually happened. So those people that chased in with leverage and had to be long, and everyone wants the sure thing, 100K to the end of the year, you still had a lot of the year to come. No talk of closing out for profits, the trade. They then got up the leverage washed out on them, even though the dollar was weak. Because once you start a stampede, even if there's actually quite benign circumstances for the cattle, there's no cliff or anything, they're going to stampede. And it's got to run itself out until exhaustion kicks in, and then they just, let's just stop. We are dumb bison, let's start eating some grass again. I've run enough for today. It seems the reason we were running was fake. There's no lion. So it's got to play out. You've all got to just stampede until they're petrified, tired, exhausted, had enough. And whatever's happened has happened. So actually, now you've got to remember something else. You might say, but, BTC Euro, BTC also didn't do so great against the euro, and you are saying good for the dollar, bad, therefore for the euro. Remember, good for the dollar, as a couple of percentage gains means euro a couple of percentage drops. But good for the dollar, much bigger percentages bad for Bitcoin means that much bigger percentages bad for Bitcoin still means Bitcoin euro, Bitcoin has lost ground against the euro too, because it's a far more leveraged market. You're comparing the small cogs revolution to other big cogs revolutions. So even a big cog that's done badly against the dollar big cog hasn't, due to the beta, done as badly. This is why we talk about the God market of fiat, the dollar. What's good for the dollar is good generally for fiats and bad for risk on higher beta anti-fiat markets. Gold, silver, commodities, tech, sensitive to rates tech, and crypto. So actually this is a decent performance. It's not a strong performance, it's weaker, but in percentage terms, it's probably gone up slightly more, but it's just had a bouncy old path of ups and downs. You can kind of, if you really wanted, people who put moving averages, which I loathe, you had a strong period, you had a soft period, you had a strong, there's kind of a swell in there. During that strong period up there, you were being lent on. Then during this grinding here, it was grindy and a bit off there, you had a little bit of an impulse. Then during this upward surge, you're having a bit of a down. And then during that down, you're having a bit of an up. And then during that strong up, you're being capped. Not down, you're being capped, but eventually the loss of momentum catches up with you and you're sold off. So there's sometimes delays because people are chasing Bitcoin, not thinking about the dollar. And then the dollar consistently stays strong, then they end up panicking out. So there's lags. It's kind of like a big locomotive with lots of iron ore trains on it, but instead of being hooked directly on, there's a bungee cord instead, which is a terrible idea from a design concept. So the main locomotive goes, but there's first a bit of take up of slack in the rubber before it starts to pull the iron ore with this big thick bungee cord one behind it, and then that one starts to go and catch up. And then after a while, if the locomotive stops, you've got this whole concertinaing up smashing into the back of the locomotive. So there's this sort of lags system between each the locomotive and each of the carriages, as there's this sort of take up of slack each time. So there can be that sort of muted reaction. And again, with leverage, a little bit of a boom. Why? You hit headlines new high. So that is my take for the absolute specialness of the first cup gold nugget break, which was this break here that we were highlighting it. And it kept being held in this holding pattern, Bitcoin, of 2.5 years, because partly of currency effect as well. People underestimate the currency effect, not because the currencies go up a huge amount in percentage term. It's a dominance of market. It's a bigger cog. And actually, bigger markets bully smaller markets. I'm sorry. But there will still be, so do you say, oh, but that means you're more pro the dollar than Bitcoin. I got some nut who strawmanned me on Twitter when I said that, and why Bitcoin will buy you more stuff. Let me just show you. Because this is typical next response. So we highlighted that same chart, and we've given the thinking to the free views. I don't think they run with it. I don't think they get it. But you get what you end up getting is a guy that sends you a shopping market and shows you how much more you buy with Bitcoin. Bitcoin will outperform the dollar. One's an asset that isn't going to be proliferated. It's absolutely going to outperform Bitcoin. Bitcoin is in a multi-year bull. We are not saying by this the dollar is a better asset to hold than Bitcoin. Not at all. Not at all. And we keep reiterating that there will be this is the guy. We've all seen this meme. Bitcoin is stronger than the do. Few realize this fact, because I said few realize the concept of money and fear and risk off, seeing dollar as a safe haven for a while. Then the blow off of that safe haven status, leading to it suddenly doing something extremely destructive, 7 trillion, that then gives a huge tailwind in the recovery process then for Bitcoin. That was why you got the breakout so beautifully on the run up here. That doesn't mean you won't ever have it again and you have to wait until the dollar does another 7 trillion. It just helps. That's all. It just helps. Bitcoin as an asset that is limited will outperform the dollar, which is a currency that seems to be unlimited. And no one said it. So to say few realize this fact, we've all seen these. We know that. We know that. What you can't understand, though, is that liquidity can sit in pots and it flows out of, when there is fear, people play defense. If the Fed talks about increasing rates, reducing liquidity, the existing liquidity doesn't want to see, where asset prices are hyperinflated, doesn't want to be sitting in a high beta, relative low liquidity, because it's only a 3 trillion market cap market. Apple's stock on its own is 3 trillion. And never mind the bond markets and everything else. So all of these points are very material, but people don't get it. This isn't the argument. It's relative overperformance to dollar and is in a macro bull. No one's arguing that on our side. This is a straw man argument. Not recognizing when liquidity is afraid and is exiting a market for which you will have underperformance. This is still not a shit performance, going from there to there. But it's in headwind. Is it a time to trade leverage longs? No. That's the message. That's what we said. That's what we said in the crypto thread that we did. Do less trading. Be relatively defensive. You will get occasional opportunities to buy dips. You've just had them. We did the non-farm, not this last one, the one before. That weekend it sold off. You could have bought the with any tether you had, you could have topped up. You can buy dips. And I think we're coming to the end, actually, of this process for searching downside because of the Bitcoin, Bitcoin NASDAQ. Relative lows. Bitcoin, higher beta, largely inflationary environment. What is inflationary? Fiat proliferation, not the CPI number. That is a measurement of effect of fiat proliferation. Inflation is not your CPI number. Listen again. Inflation is any time you increase the quantity of currency. I care not who maketh the laws, providing I control the issuance of currency. The ultimate power is to inflict inflation and to be the person who knows when it's being done. The expansion of money supply is inflationary. End of story. That is inflation. Measuring the price of goods is got lots of other factors. Greenspan was able to inflate all sorts of asset bubbles on account of globalization and offshoring all production to China that had a commiserate deflationary force bringing down costs. And he called it the miracle economy. There is no inflation. It's so hard to generate inflation. We should have a certain inflation. A certain level of inflation is good. No, it isn't. It's good for tax collectors with marginal tax rates. That's who it's good for. The Japanese have had deflationary currency. The yen keeps buying them more stuff. They live like lords. Have you ever seen a Japanese tourist in London? Best dressed, best camera, personal tour guides, you name it. Tell me how shit having a powerful currency is for an economy. It's tourists. It's not good for government. It's not good for government, and it's harder for exports. You have to really build very well incredible brands like Toyota, Sony, very reliable products, because to export it to other places that are less strong with their currency, I'm not putting the yen forward. Recently, they did that whole kill with Kuroda, and as a result, but you know what I'm saying. So back to this chart. This is on a skid, a basing, descending grind line after a broadening structure. And it's what I would describe as possibly a final lean, and it's hunting out a low. Do we have key levels of significance coming up? We have a neckline here that I can muscle up for you a little bit. Left, it's not actually a left, it's a double bottom, but it's a bit of a cranky one. It's not a textbook beautiful one. But it's good enough. And it made its target. And actually after making its target, it started broadening structures as well, in a smaller sense, much like the one we're in. Then it also had a basing descending grind line. And that formed a falling wedge. It sat on a floor and you got your next leg up. That was your divergence down. Deducting, that was another divergence down. Deducting this chart from the Bitcoin USD chart would give you divergence indicator, because that was a higher high here on the USD and a higher high there. Someone who wants to make an indicator can contact me. But basically, you want to highlight how money was moving down the beta chain out of crypto, or preferring tech, and tech was still running. So when you have the fastest runner, he runs fast, but like all sprinters, for shorter periods. He does way more in shorter time. So your crypto is Usain Bolt on 100 meters, maybe 200. But your NASDAQ is your 800, 1500 meter runner. He may start earlier when it's coming slowly risk on. He runs at a very strong, steady pace, but it's not an out and out sprint, and he can run for longer. So, and as you go lower beta, you get things that can walk only, but they walk forever. And they barely need to stop. And when they stop for a short while, generally, apart from once every blue moon, they'll sleep for a night. So you get guys that ultra marathon that essentially do a small jog and they go on and on and on and on. That would be like a Dow earnings stock, moderate growth, not too over leveraged, chipping away, say something like overstock or something. So occasionally they have to have a crash and a rest, but it's not nearly as often as the sprinter does, or the 800, 1500 meter runner. And the NASDAQ is your 800, 15 meter runner. Your crypto is your sprinter. They just can't do it for long. They do an amazing amount in a very short spell. So they start to stop sooner. They spend more time stopping. And that's when the 800 meter and 1500 meter was still running and still had some beans. And this was already diverging. So now you have a basing, descending grind line inside a macro megaphone. Now, if I'm wrong with my hypothesis, I don't think there's too much pain to come, but I don't want to call the bottom. But if I'm wrong, this is the point at which I'm wrong. The takeout of that level. And in actual fact, if I'm to be right, I would start to become a bit concerned if we go a lot below 2.5 already. You could turn against the NASDAQ stocks anywhere in this box. We've got Wednesday, a big Fed statement day. A final capitulation maybe into this zone on relative effect. Don't forget the NASDAQ could be capitulating as well. So Bitcoin could come off quite a bit in dollar terms and still be in this box. For me, I would probably want to see the bottoming occurring in there. The minute you start getting below the 2.4 and you start threatening the 2, And this is such a key level of significance. No one has this. One Bitcoin buys you 2 NASDAQs. Nobody has this. Nobody has this. They're not talking about it. None of them. None of your technical analysts. Stock to flow models. It's all about Bitcoin. How much Bitcoin is being proliferated and why. And suddenly the models stop working in risk-off periods where liquidity is flowing into more security and safety out of high betas. Because it's no longer Bitcoin's world. When it was a 5 million market cap dollars and there was 16 people, a couple of cypherpunks and their family members, the dollar didn't matter a sausage what the dollar was doing. It was totally driven by Bitcoin fundamentals and adoption. When it was 100 million market cap, it was totally driven by its fundamentals. When it was a billion market cap, it was mostly driven by Bitcoin fundamentals. When it was 30 billion, it's still mostly driven by Bitcoin fundamentals. When it was 150 billion, it's still largely driven by what's going on in the Bitcoin world, hacks, and various other things, innovation. When Ethereum came, and there's other tokens, and now you have a total market cap of 250 billion, it's still largely about that asset class. It's not even an Apple share. It's not even a spot on Apple's backside at that point. That was already 1 trillion or whatever it was, 500 billion back then. Now you're a 3 trillion market as an asset class, and institutions are involved. You think institutions don't watch what the Fed are going to do and don't have risk-off policies and don't take off the table at year ends? I think Raul's 100% right. It's hedges will lock in. So to me, this is a bottoming low that is coming into the year end. And actually, I think it's a dumb hedgie that sells late in December because he knows or should know that he's going to want to risk up for the year ahead in what can only be a back off out of a hawkish stance. Personally, the odds are high. How many interest rates do you think they can do with the amount of debt they've got kicking around? That will put them on a parabola they'll never get off. So they can't do it very much on that. They're going to end up backing off, or they're going to cause some form of a crash and then they're going to end up stimulating. Either way, you end up wanting Bitcoin. It's just a question of how soon in terms of your timing. Well, these guys try avoid being overly timing markets. They're not very technical analysis orientated institutions, but they hold and they're more disciplined. So they'll buy to a price level if it sells off, and they will re-risk up in January. And I absolutely agree with that notion. I know too that people want a bonus up for December and go on holiday. I've seen it before, and I think that characterization is accurate. So you've got a basing descending grind line. What do you get? How do you get that? Because there's been people that were already nibbling, and then there was a big nibble on the disorderly spill here. Broadening structure. We thought, okay, something's going to happen. Could it base here? No, a deeper dip. Actually, it's a great opportunity, a deeper dip. This might not even run this low. It could, but it could make candle bodies that are lower, like that. But it could also run this low, like that. Either way, I'm okay. I am out of this scenario. What is the scenario? The scenario is this, big blue. This is a macro continuation of overperformance of crypto to NASDAQ stocks. That's what we are playing, a continuation structure for me. That's why I said, be defensive, sure, but be ready to buy next rather than being too cute about shorting. That's why I've done what I've done, which is more relaxing. You've got to preserve your mentality, your mood, and your concentration and all of this. It's more relaxing. I'm not watching P&Ls very much. I've got plenty of fiat ready to jump in. And I actually don't want to miss jumping in because I don't want to have to chase in later. And that's my next move. Why? Because it's trading with a macro bull. Why? Because my first case scenario is we're in a macro continuation pattern. You've already had the first cup gold nugget against the tech market, from which you ran from 0.97 at the axis to 4.8. That means you got 4.5, almost 5 NASDAQ baskets of Microsoft, Amazon, etc. for a single Bitcoin. You know what this move generates for you? You've got 4.8 down to 2. You've got 2.8 NASDAQ baskets, probably projected from 3.4, 3.5. Let me say that again. Add 2.8 to 3.5. What do you get? Pretty nice number. 6.3. What do you tend to get? Overperformance. What was the target here? The target here was 3.5. That's your neckline, 3.52. Where did you end up? 4.8. So I'm telling you 6.3. Plus, I think there's a chance that you'll get, it's not the first, but it's a massive structure, a bit of an overburn. So you could be looking at 8, 7.5, 8. One Bitcoin will get you 7.5 to 8 baskets of NASDAQ. Say it again. One Bitcoin prediction, 6.3 is the target. And I would say I would close 50% of the position, maybe 60. And then I will play for overperformance and overshoot. That could take you through 8. What will the NASDAQ be in an environment where Bitcoin is going up? Next question. Higher. Higher. Is it tomorrow? No. We're waiting for an RL2. Can the pattern extend? This is very clean chart. It could. So let's go upper time frame. How long? Because that's the next question people ask. How long? So I think we're in the process of making an RL2. I think you go a little lower, potentially. This is regular scale, a little lower, but that it will end. Well, that was your high against the NASDAQ some time ago. So 11th of March to July, these were your time frames. So again, let's do this. High. That was the high. To the low. High to low. Then low to high, next high, secondary high. Low to secondary high. High to low. I'm guessing somewhere here. Move from secondary low, if we're accurate with the continuation pattern, move from secondary low to third high, a moderate move, still a bit of burnt hands, I would guess like that, into a final low, a third low from the third high, I'm guessing like that. Break, well, you can come up and mess about and funnel for quite a while. Chill out, maybe like that. So what have I just drawn? This is what I've just drawn. That time frame for that time frame approximately guesstimated there. There. That's what I've just drawn for you. Maybe that's a bit too rushed. Maybe it can take longer. Maybe that's too aggressive. Okay. May. End of April that you break. May. But there's a lot of upside to be had here because tech stocks will be going up in that point. And you'll probably be on the Bitcoin US dollar in a rising wedge, which is the perfect trader, retail traders killing pattern. Because they already bought the 69K high, which is here, and then got washed out on the sell-off. Now this one might make a new high or it might not. But that was your 69, that was your 64 against the dollar. They're getting murdered on that. They're getting murdered on that chart because it's always support and resistance. Oh, you made a new high, buy, wash out. If we make a third high here against tech stocks, that could be a high against the dollar, or it could be a double top. You might get guys, it might not make it all the way. It might show a bit of fizzling. People will go, oh, I don't know, it's a double top. So if it did that, you know, they might be scared that it's going to go down. And then you do go down a little bit here. It comes down. They'll say, I told you so, even though it hasn't triggered. It doesn't trigger and it squeezes up. Everyone goes, technical analysis doesn't work. You know, you're looking at the wrong things. You're not doing 360-degree analysis. You're going to be in a rising wedge, a nightmare for retail traders to trade. Much better to be a hodler in that environment because you're then with the macro trend. And they will fail. And then it eventually moons. Here, when you moon, you pop out the top. Everyone expects rising wedges to break down. Loads of bear calls. That's what I think will happen, and this is my primary scenario. Hence why I say do very little here. It's like it's like when we were here. Get ready to accumulate. There was your final accumulate. Took a while. You might have had to wait. Maybe it went a little lower than you thought. Actually, you shouldn't have thought that because there's your target. It's quite reasonable for a minor overrun. It's actually a good performance to target. Plenty of opportunities to get out on a wick, and it pippied not much lower, and then it started to go. It's actually a good performance for that head and shoulder. There's nothing more in it. It's not a reversal. It came back. That has traded right up to where that right shoulder is. And since then, it's come with big wicks down and is pippy down. It's pippy down. It's pippy down. It will finish. It's close to this low. This is my scenario for you. And that's the best I can give you. That is why people will say, oh, you're bullish. Oh, you're bearish. There's such a binary. It's such a binary thinking. It's like a light switch on or off. What time frame? Being moderately bearish for the short time frame into a final low, whereafter a good move up will come, which is what we're doing here. We're saying there's possibility of a slightly lower low, but I don't want to short. There's not much money left to be made if this scenario is right. And the next move for me is going to be strongly up. So I'm not actually short. I will not be screaming from the rooftops how clever I am, how I shorted the market, even with structures. I don't think there's too much left in it. And actually, bear patterns can fail too. Just because you get a pattern isn't a 100% guarantee of performance. So again, we're moving into a period where I expect a final low. Hello?
Yeah.
Hello?
Hello?
So, excuse the interruption. So I think I've said all I want to say here. That's why there's no interest in shorting. If you wanted to be short and you're of moderate medium time frame, you needed to be in earlier up here when we were talking, not this live trading just past the one before a month ago, that the crypto was looking a little bit shaky, marginally higher high on the dollar. That was this point up top here that I'm highlighting. This is Bitcoin versus on the dollar and the monthly shooting star and all of that. That's you could have nicked some and quite a good trade. And of course you could have been cross crypto. That was the other thing we said in that thread, that people could trade cross crypto if they felt the absolute desire to do things. They could trade cross crypto, and that's where your FBTC has served you very well. But even still, just be in hodl of just have some fiat ready to implement over here and to get to buy the low too, if we're right. And then you know what? You haven't got too far to wait to know I'm wrong. I'm wrong when one Bitcoin fails to buy you 2.2 basket of the NASDAQ. Simple as that. clear and simple ratio. By the way, in dollar terms, how could this hurt you more than we are reflecting? If you have a major crash in the NASDAQ and in crypto, but the NASDAQ falls substantially too, the Bitcoin isn't huge. Bitcoin's fall isn't significantly larger. You could come down here and actually have had quite a reduction in Bitcoin value. You could say I have quite a flat bottom. So you came right down to 2.36 on the low side of the box I drew of accumulate, or God forbid, even the 2.23, this key level, maybe one more time. And if you've had a 20% correction on the NASDAQ, you could have a 23%, 24%, even 25% correction on Bitcoin, and you'll drop from 2.9s to 2.2s. That's possible. That would be slightly hair raising. But again, after the 50% at the halfway mark, not seeing it easily. You've already come off quite a bit, but it's possible. That would be a worst case scenario. This scenario, how are we proven wrong? At what point we proven wrong? Again, to reiterate, the day you can't buy 2 NASDAQ baskets of stock with a single Bitcoin. And that is when we're wrong. That's when this now turns into something else, a falling wedge, something far more convoluted of structure. And it's not impossible. You could do that, and you could run a marginally lower low, and that would be a nightmare scenario. Because then you'll sit like this. This will be a lot longer. You'll typically have a 3 impulse wedge. That's how they come. So then you can write off. You would get out there, and then your next game is to get in down at 1.4 on a down leg before it does that, and then breaks. So there are other ways that things can go wrong here. Good. I think I've said all I said. But first point is I don't see the halftime oranges, and that's why I made such a big thing about calling it halftime in the football match. It is, for me, a real halftime correction, because you made the target of the 2.5-year pattern. You then made a major macro reversal pattern, and you made that downside target, and it finished there. That was your blow off, your finish, your target make, your overshoot, your reversal. The whole story played out perfectly. End of the first game of football. Everyone is in the changing rooms. They're not out in the field anymore. There was a proper correction. You've got to accept that 64 down to 29 and some change is a proper correction. At 55 on equities, it's already a major bear market at 20%. But of course, this is not an equity market. So it's a proper correction, but it is still a macro bull. So for me to run the halftime oranges low is a major loss of faith in crypto. It's a significant move. So to do this falling wedge scenario, that is running halftime oranges low. Well, that undermines halftime oranges then, because that means you're back in the change room again, and it's not a game of 2 halves anymore. That means something else gone on. You know, the lights went out in the stadium or something. Okay. All right. I've done enough chitting and chatting. I hope this was of useful to you. And that is why, as I say, there might be a bit more to go. But the best of the shorting part is out. I'm not interested in being short. Just because I am small time frame a little bit bearish does not mean I am bearish. It means I'm getting ready to buy soon. That's what it means. And who will I buy? I might not buy Bitcoin if I have the likes of Ethereum, BTC still with an upside to go. I might not be buying Bitcoin. I might choose a relatively well set up alt. And actually chasing the bigger market cap of Ethereum is smart, because money, when you recover, first the liquidity chases into the liquidity areas, the high liquidity areas like Ethereum. High market cap areas, let's just say. I don't even think there's a lot of Ethereum that might want to be available, but you could get actually good moves. So the more risk averse will chase into the more solid, more established projects first. So again, that's a case for the FBTC, which we've been calling for an immense period, and again has been an accurate call. So we get a lot of things wrong. Don't misinterpret me. I'm not trying to be smarty pants here. We get plenty stuff wrong, but this is a great move, and it runs 10% for us with a bit of overperformance. In the same way, this inverted head and shoulder that was 66 actually ran 8.2. Not 6.6. It cleared the target, and this entire structure has formed on it. So you're going to get beyond 10% on FBTC. So the trade might be buy Ethereum as Bitcoin does its RL2. Okay, trust that was useful, and others. They will come later, but something like Sol might take longer, and it'll have a shorter window. It's a bigger sprinter. It's like a 60-meter sprinter. It just can't even do 100 meters, but it'll run it super fast. So it's probably safer to start in Ethereum and roll into the higher betas once Bitcoin continues to assert its recovery. Bye for now.